5, 4, 3, 2, 1. Let's wrap up our week-long Beat the Street series. All week long, we've been profiling some of America's top-performing domestic stock fund managers, and today, we're hearing from number one. Amy Zhang runs the Alger Small Cap Focus Fund. The best-performing U.S. domestic stock fund this year is ranked by Morningstar, up 38%. That's against the measly 12% gain for the Russell 2000. And we earlier spoke with Amy and asked her about her success and how she is beating the street.
As active manager, it feels good to be in the stock pickers market. I think it's a testament to bottom-up, benchmark agnostic, high conviction investing.
You know, we look at so many fund managers and talk to them here on CNBC, and some of them each have their different styles. You went to Columbia Business School. You come from the value school. Help our viewers get smarter about how they analyze their holdings. What are the one or two metrics that you look at the most closely? Is it free cash flow? Is it valuation? What do you watch for?
Well, that's a great question. I think, you know, I was schooled in value investing, and I think that really helped me in terms of my investment temperament, that I pay a lot of attention to downside protection. And I think, you know, intrinsic value is the most important, you know, at what price to buy. So we spend a lot of time, you know, here at Alger, you know, running different scenarios for bear-based bull. And for me, it's really always important to have, you know, very solid bear. It goes back to, you know, what Ben Graham said, you know, that in the short term, the market is a voting machine. Over the long term, it's a weighing machine. So we really focus on intrinsic, you know, value of a stock. And for us, you know, I define smartness in terms of revenue for our strategy. So I think revenue is a better indication of size than market cap. And at the core of what we do is identifying exceptional small companies very early on in their corporate life cycle that have the potential to become successful large companies. Those companies are usually coming of age, you know, undergoing positive dynamic change and under the radar. And we really look for sustainable, durable revenue growth supported by a very strong and wide moat. And usually that moat keeps getting stronger. And over time, you know, the multiple usually hold or even expand. And we really look for, you know, a long-term profitable growth, and EPS drives stock price. You
know, and it's hard, though, because you're dealing with companies that don't get a lot of analyst attention, maybe none. You may have no sell-side analysts covering these stocks. You've got to look at thousands of companies. About 8 years ago, your currently biggest holding, Cantel Medical, CMD, had a big drop after earnings. And you told me before we recorded this, you said, it simply dropped too much for me to be comfortable with it. How did you know that it fell too much? And why have you stuck by this company for 8 years?
Oh, yeah, well, Cantel is a great company that, you know, just to answer your question, back then, I think maybe only one analyst covered, which was great. And that time, they were really undergoing, you know, sort of a change. And I always look for growth, not priced in. So their dialysis business back then was a cash cow. But I always like, you know, a cash cow that can support a growth engine, a multiple growth engine. And so that time, the growth engines were endoscopy and water purification. And endoscopy now is the fastest growing, largest and the most profitable segment. So this is a pattern recognition for me that, in a sense, you know, that favorable product mix, you know, generate a lot of revenue and profitability, you know, over the years. And it just recently, you know, they had a hiccup. So, you know, we bought more on weakness. And I think Cantel, you know, over the long term should still do well.
Yeah, Viva, V-E-E-V-A. What, again, more sort of in the medical science field. What made you attracted to this company?
Viva is a cloud-based, you know, software company that they are the industry cloud for life science business. It's sort of the same pattern, you know, like they started with, you know, CRM with Salesforce.com. That's a long-term, you know, partnership. And back in 2000, they went public 2013, but back in 2015, when I started initially investing in it, you know, they just started Viva Vault, which is a growth engine. And a lot of people were skeptical. Clearly, stock was stuck in the mid-20s for a long time, for I think 6-7 months, and we were building a position because we really believe Vault, you know, which is does content management for regulated industry, for starting with life science has a lot of potential. And now it worked out that way, that Vault is growing 50%, and it's becoming over 40% of their business, and also higher margin. So sort of like same pattern recognition, even though different business, yeah. But still, like can tell. And their overall addressable market is over, $8 billion, and now the company revenue is only less than $800 million. So
and we showed some of your other top holdings on that chart here, Cantel and Viva. The Alger Small Cap Focus Fund, AOFIX, 5 stars, up 36% this year. It has been a heck of a year, and right now, #1 domestic U.S. stock fund manager out of all of them. Amy Zhang, Alger Small Cap Focus Fund, great work by her, and thanks to my team for the whole series all week long.